Everyone. Thank you for joining us. We're going to begin in just a few moments. So please, if you don't mind, go ahead and drop your name in the chat. Introduce yourselves if you know your PDS number. I'm happy to have you put that in there as well. But go ahead and do some quick introductions with each other in the chat if you don't mind.
Hola, buenas a todos, bienvenidos a esta sesión. Les voy a estar pidiendo que el día de hoy pongan en el chat su nombre completo y si lo saben también les agradezco que incluyan su número de PDS. Así que les pedimos que en este momento hagan presentaciones en el chat. Gracias.
Hello to all the familiar faces, and hello to everyone who's new. Welcome again. We'll get started here in just a moment.
Hola a todos esos rostros familiares y hola también a todas las personas nuevas. Vamos a empezar en un momentito.
All right, it looks like we are good to get started. Always want to be respectful of your time. And so we will start with our introductions of how our dual translation will work.
Hola, buenas a todos. Queremos respetar su tiempo, así que vamos a empezar. Vamos a empezar explicando cómo funciona el sistema de interpretación, primero en inglés y después en español. Next slide, please. Okay, thank you, everyone. Good day. Today we will have simultaneous interpreting available. So for those of you that speak Spanish, you will be able to listen to me speak in Spanish. Regardless of that, those of you that speak English, in a moment you will see that once the language rooms are open, you will have the interpretation globe pop up. For Zoom desktop versions, this is usually at the bottom of your screen. You have to click the interpretation globe to see the available languages, and all users need to select one language room to enter and remain in that room until the end of the webinar. And we do suggest that you mute the original audio. Next, please. Now, if you are joining the session using a mobile phone, once the interpretation is turned on by the organizer, you will see what's on the screen. You will have to select more in the language interpretation, and you will then be able to select one of the available language options, in your case, English, and please do be mindful of muting the original audio. Next. Hola a todos, en el día de hoy tenemos interpretación simultánea disponible en idioma español. Si ustedes están entrando en esta sesión utilizando una computadora, una vez abiertas las salas de idiomas va a aparecer el globo de interpretación. En las versiones Zoom Desktop suele estar en la parte inferior de la pantalla. Tienen que hacer allí clic en el globo terráqueo de interpretación para ver los idiomas disponibles, seleccionar el idioma español y por favor no olviden silenciar el audio original. Next, please. En el caso de que ustedes estén uniéndose a través de un móvil o algún tipo de teléfono, una vez que se encienda el sistema de interpretación, tienen que seleccionar la opción más y a continuación interpretación de idiomas y allí seleccionar el canal de español. Y nuevamente les recordamos que silencien el audio original. Si tienen cualquier tipo de preguntas para utilizar el sistema, no duden en consultar a través del chat. We're good to go. I think you can turn it on.
All right, awesome. And thank you so much. So I'm going to stop my share really quick because I know when I do the interpretation, 9 times out of 10, I have to do it this way. So here we are. I'm going to hit that globe now. Again, You can choose English or Spanish once I hit start, so you should see that now. Go ahead and hit English if it's your choice of language, and Spanish if you would like to hear the presentation in Spanish. All right. So, welcome again to those of you who know me. My name is Marlene Toby. I'm a senior associate here at Civitas Strategies, and happy to be here with you guys today to present business structure, sole proprietor or incorporation. So, for those of you who are just here to learn a little bit or want to dig a little deeper into the difference between those two, you are in the right place. And before we begin, I would like to provide this disclaimer. So I'm just going to go ahead and read that for you. This information contained here has been prepared by Civitas Strategies and is not intended to constitute legal, tax, or financial advice. The Civitas Strategies team has used reasonable efforts in collecting, preparing, and providing this information, but does not guarantee its accuracy, completeness, adequacy, or currency. The publication and distribution of this information is not intended to create, and receipt does not constitute an attorney client or any other advisory relationship. Reproduction of this information and recording of this content, including the use of AI, are expressly prohibited, and only non commercial uses of this work are permitted. All right. So today we're going to talk through the different types of business structures. We're going to talk about the difference between a sole proprietor and all the different corporations. The highest, we're going to highlight those pros and cons for each of the structures. So we'll go one by one, and then we'll look at the business structure that would hopefully work best for your organization. Now, when you're thinking of basic business structures, there are two, which are your sole proprietorships or corporations. Now, with sole proprietorships, you are the business and the business is you. So these are the easiest to set up. They can be done very easily. Corporations, which do include LLCs, these are separate business entities, and there is an incorporation process that you have to go through. And it does involve some cost, some administrative steps that you will need to take in order to establish a corporation. So we're going to start with a sole proprietorship, which is usually one of the easiest and first lines of establishing yourself. So a sole proprietor, excuse me, a sole proprietorship is one of the most basic business types. It is also the most inexpensive. Let me open up my chat just to make sure that I'm following. Okay, perfect. Thank you. So all that you need to establish a sole proprietorship is for a single business owner to basically go and obtain the necessary licenses and permits, whatever those may be. And then after that, you can start doing business without any additional requirements. Now, owners of sole proprietorships are considered to be self employed. Keep in mind that if you all have questions, do not hesitate to drop those in the chat. We will address those at the Q&A at the end of our session today. Now, it is important to remember that as a sole proprietor, you are the business is you. This means that in terms of taxes and liability, there is no separation between the sole proprietorship and the business owner. Now, I'll give you an example. If you have business debt, your personal assets are not protected and they can be legally seized if you were to maybe default on a loan or something to that effect. So On the positive side, a sole proprietorship is very inexpensive to start and it's easy to maintain each year. And you, as the business owner, will have full control over all of the decisions that you make for the business. Now, also, I want you to understand that a sole proprietorship is considered a pass through business, meaning that profits from your business, which is the money left after your expenses, that is reported on your Schedule C form 1040, and it is included as part of your personal income. So you're going to pay both self employment tax, which is 15.3% for both Social Security and Medicare, and you're going to pay personal income tax on the profit. So the self employment tax is calculated on the net profit, which is actually shown in line 31 of your Schedule C. And the same profit is also then subject to your regular income tax rate. So typically, when we do examples, we'll use like 22%, which is where most people will fall in that IRS schedule for your income tax rates. But keep in mind that you're going to be taxed the self employment and the Medicare, which is the self employment tax, so Social Security and Medicare. And then you're going to also be taxed at your regular income tax rate as a sole proprietor. All right, so now we're going to review all of the corporations. And remember, we said that LLC is also included in that. So, first, a really quick definition: a corporation is a business that has been incorporated, resulting in a separate corpus or body. Now, where a sole proprietor is not separate from the business owner in terms of taxes, liability, and debt, a corporation is a legal entity that is separated from you as the owner. So there are undoubtedly benefits to this legal separation between your business and the business owner. Um, Though it does come with some additional efforts, such as annual filings and a separate tax return. Um, these things are going to be needed to set up your corporation and to maintain it. So, in terms of liability, your personal property and money are usually protected from outstanding debts of the corporation. So, in terms of taxes, some corporate structures like an S corporation or a nonprofit, other nonprofits, they can provide some tax advantages, which we will discuss as we move a little bit further along. And keep in mind, if you do have questions, drop those in the chat, and we'll address those as we get to our Q&A. Now, there are 5 types of corporations that you will most likely consider. There are nonprofits, C corporations, S corporations, partnerships, and LLCs, in other words, limited liability companies. So we're going to cover each of these independently, starting with the nonprofit corporations. Now, this is basically a charity, which is a public serving company, and these are not owned by any individual. Instead, they have actually board of directors who are typically not employees and they lead the organization. So some of you may be familiar with nonprofit organizations. Now, nonprofits can be a bit difficult to manage day to day since the director of the corporation needs approval from the board of directors to make key decisions. Now, I know when I worked for Head Start and Early Head Start, that was definitely the situation where, if as a director of the program, all of the decisions had to be approved by the board. And so, if you're familiar with that type, you know exactly what I'm referring to. Some of the center-based organizations may also be this structure as well. Excuse me. Now, in addition to that, since the organization is not supposed to be operating to generate profit, there are several rules about how money must be spent in a nonprofit. On the positive side, nonprofits are typically exempt from most federal and state and local taxes, and they may be eligible for some government and foundation grants that other organizations usually are not eligible for. Now, the remaining corporation types are for profit that we're going to talk about, and that means that they are owned by people other than corporations and that they are intended to provide a profit for the owners. Now, keep in mind that a sole proprietorship would also be considered a for profit organization. Well, let's talk about the C Corp. Most of the large companies that you see and hear about are C corporations. C corporations are basically owned by shareholders, and the structure is easier for larger enterprise since it does allow ownership to be transferred through shares. Now, they are also the most complex in terms of their legal requirements, and they are one of the most expensive in terms of administration fees or taxes. They also suffer from double taxation, and that is basically profit from the company is taxed at the corporate rate, and then the owners need to pay an additional income tax on it. So, for most childcare businesses, this additional effort to establish a C corporation in terms of paperwork and the tax is likely not going to be worth it for you. So I don't see a whole lot of childcare organizations as C corporations. And that is mainly the reason why it's the benefit um, is usually not worth it um, for our family and our center-based providers. So, in reaction to the complexity of owning a C corporation, the federal government created the S corporation, small business version. And so, S corporation is basically a separate legal entity from you personally, just like a C corp, but it is limited in the number of owners. I believe it's up to 100, if I'm not mistaken. Now, it offers your reduced taxes, and as you pay withholding taxes on a reasonable salary, and we'll talk about what reasonable salary is and looks like in just a moment, the remaining taxes are then taxed through the owner's personal taxes. So basically, the owner do not pay self-employment taxes on all the profits. So it is a much less complex structure and easier to manage than a C corporation. We do tend to see a lot more of our businesses in early care and education structure themselves as an S corporation. Now, there is an alternative to that as well, which we will talk about right now. So it's definitely worth looking at or talking about an S corporation in terms of taxes and how you can potentially save money, because S corporation owners have to pay themselves what I mentioned before, a reasonable salary. That reasonable salary is typically 30 to 50% of their total pay. Now, this is taxed at the same level as a sole proprietorship. That's that 15.3% with the Social Security and the Medicare. Now, the remaining amount is going to be considered profit, which is then taxed as just income. So we have an example here on the board for you. Let's say that you pay yourself $30,000. Now, as a sole proprietor or a single member LLC, you would pay $11,190 in taxes, which is basically your 15.3% for self-employment and the 22% that I said we would typically use in an example for your IRS income bracket. Now, if you are an LLC or an S corporation that is paying yourself $12,000 in a reasonable salary, then you would only be paying $6,600. So do you see the difference between being considered a sole proprietor or single member LLC versus an LLC or an S corporation? There is a, yes, I see some heads nodding. There's a big difference in the taxes, right? It makes sense for you to look at that if you are a business that is making a nice profit and you want to be able to save a little bit in your taxes in the long run. Okay. What we usually do recommend that you're at a place in your business where you're making a profit in order to do that, which is declare yourself as an LLC that is being taxed as an S corporation. And I'll talk a little bit more about that in a minute. Want to jump deeper into that reasonable salary. Now, we already told you that that's usually 30 to 50% of your total compensation. Um, And it does provide a balanced approach between salary and distribution. So you want to be able to appropriately pay yourself. And to do this, you will need to survey some other comparable positions. You can look at things that are advertised online to ensure that your compensation is aligning with what the market rates are. But you also want to make sure that you're looking for similar work and responsibilities. So just because someone has the same title as you does not mean that that is what you're going to go with. You're going to look for those who are doing similar responsibilities and have similar line of work that you are doing. So it may not be a director somewhere else. It might be a Head Start teacher. It might be a Head Start director. It just depends, right? But make sure that you are looking for similar work and responsibilities when you're doing your comparison to figure out what your reasonable compensation should be. And then when you're thinking about that amount, you want to remember that compensation doesn't need to be um, another business owner specifically. You can benchmark against other professionals and other employees. But again, as long as they are performing similar functions and they have that comparable skill and experience as you do. And that's what you're going to be looking for when you scan the market. Now, I want to jump into partnerships and keep in mind, if you have questions, please always drop those in the chat for us. A partnership is a business where two or more individuals share ownership. Now, each person is going to contribute equally in terms of the investment that you have with the business, but you're also going to share the profits and the losses of the business in the same way. So, um, because the nature of partnership involves sharing governance, typically there are very explicit very explicit processes to address and how you're going to resolve disputes, share profits, and change ownerships. So partnerships are usually inexpensive to set up, but they also have that shared liability and governance. And I will say that getting out of a partnership is not as easy as one would think. I had a couple of friends that established a partnership and things went sour and they tried to dissolve things and they had to um, seek legal counsel in order to do that amicably. So just keep those things in mind as you are looking to establish partnerships. All right, so we save the most typical classification for last, which is the LLC or liability company, limited liability company. This usually offers um, small business owners the greatest ease at startup. It has the most flexibility. Um, and I'll talk about that flexibility in terms of ownership. So LLCs can be owned by one or more individuals and are governed first by your state. That basically means that they are state level corporations, not federal. So for your federal taxes, you are just going to need to let the IRS know how you want to be taxed or treated at tax time. So this means that when you start an LLC, and again, each year thereafter, you can choose or elect which type of corporation you want to be treated as for tax purposes. So if you don't do anything, you're going to be a sole proprietorship. But if you send in the form, and there's a specific form that you have to complete, then you're just basically letting the IRS know that you want to be treated as an S corporation or C corporation or whatever you elect to be treated as. Now, I do want you to take note that You typically you can only change your elections once every 5 years. So let's say that you do elect to be treated as an S corporation. You're going to need to remain that for 5 years, and then you can go back and change it after that 5 years is up. Okay. All right. So as you begin to grow your business, I would encourage you to look into electing to be an S corporation or C. I mean, treat it as, I'm sorry, not being, but treat it as. And that's the wonderful flexibility of being an LLC because you can go back and forth. And that's when I do coaching, oftentimes I'll tell people you don't necessarily need to start off as an S corporation because if you do, then that's what you're going to be completely straight through. When individuals start off with an LLC, you can be treated as a sole proprietorship initially, and then as your profit starts to grow, and you get to a place where it's going to be more beneficial for you from a tax standpoint, then you're definitely going to want to look into being elected to be treated as an S corporation through your LLC. There's also less cost to set up and maintain through the state when you do it in that way. But I want you to know that regardless of the type of corporation that you are taxed as, with an LLC, your personal assets are protected in the same manner as a corporation. So something to keep in mind. Okay. And thank you for your questions. I will definitely address that, Gwendolyn, as we get to the end. I see it. Just acknowledging. Okay. All right. So also wanted to let you know that LLCs are, oh, wait a minute. Actually, I'm going to skip this one. We've already talked about that. Uh, so which establishment is going to be right for you? Well, it's going to vary depending on who you are, how your business is set up. But there are a couple of questions that you would want to ask yourself to basically determine that. One is, am I new to my business? Do I have plans to stay in childcare for at least 2 years? And am I making 15,000 or more in profit? Now, remember, I told you guys that there is a profit limit that we expect people to be making or suggest that people are making before they do that transition to being treated as an S corporation. That is where we are. It's about $15,000, $20,000. If you're profiting that, then you may want to consider looking into S corporation or an LLC that is being treated as an S corporation. When I say treated, I mean taxed. All right. So in the field of early care and education, for most of our childcare providers, three business structures usually rise to the top that are the most considered. So if you are a new business, and you're starting as a sole proprietor, that's going to be, well, starting as a new, let me say that again because I totally mixed that up. If you are a new business, starting as a sole proprietor is probably going to be the best and most common structure. Now, once you have become more established, you will likely want to consider being a single member LLC. A lot of businesses will start off with an LLC, but knowing that LLCs can still be treated as sole proprietors at the very beginning. Now, if your business, again, is generating at least 15,000 or more in profit, that's when you're going to want to consider either filing as an S corporation or allowing your LLC to be treated as an S corporation. Now we're going to look at some pros and cons of all of our establishments, our business structures. So first, we're going to start with the sole proprietorship. We already know that those are easy to set up, um, and they are taxed at the 15.3%, which would be a con. But keep in mind that sole proprietors are best for very new businesses. And if you have an existing business and you're close to retirement, it probably makes sense for you to remain a sole proprietor if you've not switched into a different category. Or if you're an LLC, you can just elect to be treated as a sole proprietor. Now, if you're starting your new business as a sole proprietor, you're definitely going to want to take a couple of steps or keep these in mind. That is, you want to get a federal EIN number, which stands for Employer Identification Number. You want to register with your local government as required. And you may want to set up a doing business as, which is a DBA for your trade name. Okay. All right. Now, for single member LLCs, if this is what you are considering, here are some of the pros and cons. The pros: easy to set up and maintain. You have the greatest flexibility in elections on how you're going to be treated at tax time, and you have liability protection to separate business from personal assets. Cons would be, of course, that every dollar of profit is going to be taxed at the 15.3%. And keep in mind that this structure is best for providers who plan to be in business for at least 2 years or more. And it's important to remember that the benefits of becoming a limited liability company is the protection of your personal assets. And of course, the flexibility in how you are treated at tax time. For next steps in becoming an LLC, you would want to do the following. First, you're going to want to create an LLC with either an attorney or an online service. Um, some people opt to do this on their own, and if you know how to do that, that's fine. Get your federal employer identification number through the IRS and register with your local government or state as needed. Now, either becoming an S corporation or choosing to be treated as an S corporation through your LLC, um, we do have pros and cons here as well. Um, the pros is that it provides that tax advantage and the liability protection. The cons is that you need to set it up as a corporation and separate taxes and record keeping. So, for those of you who use your personal banking accounts, you will have to for sure try to establish a business bank account to separate your personal from your business assets if you are going to be doing it this way. And I highly recommend you do that anyway, even as a sole proprietor, because you definitely want to be able to identify which assets are exclusively for your business and which assets are exclusively personal, right? It just helps in the long run and it's best practice. And then, of course, this particular structure is best for individuals who are maybe filing as an S corporation. If you want to do that, you want to have at least $15,000 or more in profit. If you get to that stage, then that's going to be good for you in terms of flexibility and in terms of tax advantage savings. So, setting up your LLC, next steps would be to create that with an attorney, get your EIN. Remember, I mentioned that there's a form that you need to fill out in order to be treated as an S corporation. If that's what you would like to do, that is Form 2553. So you're going to want to fill that form out so you can inform the IRS that you would like to be treated as an S corporation at tax time. And of course, separating your payroll if you have that, and all accounts and record keeping systems will need to be separated as well. Okay. Trying to move slow just to make sure everybody's getting everything. Please let me know if you have questions in the chat. So if you need help getting incorporated, you're definitely going to, or like I say, for instance, if you need help setting up your LLC, you can either hire an attorney, and they will provide some strong guidance. Keep in mind that that can be expensive, or you can use an online service, which is less expensive, but you'll definitely have to pay for the additional advice and guidance. We always recommend that you choose the method that works best for you and that you're most comfortable with. If you feel that you need a lot of guidance, for example, then you may want to go the route of choosing an attorney. However, if you're feeling pretty strong and you have a good understanding, um, you know what is going to take for you to become an LLC, you can either opt to do that yourself or use an online service. But we always recommend that you do your due diligence, do some research, look at the cost, and consider all of the pros and cons before you make your decision. All right, so we are at the place where we can get to some of our questions. I did see, Gwendolyn, that you had a question posted in the chat. So I am going to go through that for you. Let's see, you said, so if you have partnerships, who files for the business? So you're both going to put your names on that paperwork. So that when you file for a partnership, there will be a place for both individuals to put that information. It just really depends on who's going to want to do the actual, you know, I'll do this part, you do that part. But that's the whole premise of a partnership, making those decisions together to make sure that you know who's doing what. But again, everything in a partnership is uh, well, usually it's 50-50. You can try and set it up to where it's differently, but I would highly recommend talking to an attorney if you want to try to set that up in a different way. Does that make sense, Gwendolyn? And did that answer your question? Okay. All right. Any other thoughts or questions? And we have plenty of time, so please chime in if you have those. And Soul, I don't know if there's any questions in the other room, but we are okay. Thank you.
I have a question.
Yes, ma'am.
I see where your I would say the owner or whoever um after when you pay yourself, just say that like you had 15,000. Why is it 15.3%, or is that just something that's for everybody?
It's basically the self-employment tax, and it's a combination of your social security. And let me go back to that slide just so that I can make sure that I'm showing you. Um, it's Medicare and Social Security. So one I think is uh, 12 point something, and the other one, they basically both of those add up to 15.3%. Everybody that is self-employment tax, that you have to pay that. Does that make
Oh,
sense?
it does,
And I
but
don't have the
don't seem like you gonna have no money because if you got to pay
exact.
15%, what you gonna live off the rest? I mean, I don't get that part. I mean, if you got to
So
pay, that's a lot.
well,
That's
15.3% is the standard. Then you take, for example, and let me see if I can roll back to one of the examples that we had here so that we can kind of talk through that again. Let me see if I can find that really quick. Uh, da-da-da-da-da-da. Let's see. All of my slides look a little blurry. Taxation. I think this is it here. Okay. So, yep, your 15.3 is going to be Social Security and Medicare. So when you work a regular job, you still have to pay that. You're still kind of paying that in a sense anyway, right? So, like if you have a regular job and you look at your paycheck, you're going to see that there's a percentage for Medicare, there's a percentage for this. And when you add those two up together, that just comes to 15.3. Now I can separate that out to tell you exactly what it is if you would like me to do that for you. Let's see, 14. Okay, give me 1 second. Pulling that up for you real quick. And I do see that there are other questions, so I'll get to those just a second. LaShawn, I see your question. All right. So your Social Security is going to be 12.4, and your Medicare is going to be 2.9. And again, together, those two are going to be 15.3% for your self-employment tax. Does that make sense, Gwendolyn?
Yes, it do. Yes. Thank you.
All right, perfect. All right.
I
Let
have a
me get
question.
to, yes. Who's Rudy?
I think somebody in the chat was before me though.
Yeah, I
Oh,
was so let me try to address LaShawn's question and then I'll come right back to you, Rudy. Is that okay?
yes.
All right. So LaShawn says if you have been in business for 3 years and you have never made a profit and not interested in growing the business, it's just a hobby, but let's see what else we have. Making 10 to 14,000, filling out well, filing income on personal tax with full-time job. Okay. Help me understand because I don't see the question. LaShawn, can you help me understand what your question is here?
That was a question. um,
Um,
One, do I have to um be an LLC or do I have to be I don't have
you don't have
okay.
to, no. So when you establish a business, you're automatically a sole proprietor. So you don't have to change anything. You can continue to operate as a sole proprietorship if
Okay.
that's what you would like to do.
All right. So when I just fill out my tax forms like I'm doing now, I don't add anything specific like telling them I'm a sole proprietor because they what or automatically assume or no.
So the one thing that I would say to you is if you're not saying anything about your business, it could be potentially harmful to you, and you could be losing, you could be paying more taxes than necessary. Because as a business owner, there are things that you can write off
Mhm.
that would minimize the amount of taxes that you pay. So by you not sharing that information, you're probably paying more than you need to. Um, if you have the opportunity, LaShawn, and you are working through the decals, I would highly recommend doing a one-on-one coaching session so that someone can walk you through some of the pros and cons of that,
Mhm.
so that you know if one, you're subject to, you might be putting yourself at risk of an IRS audit if you're not filing appropriately. And number two, you could be leaving a lot of money on the table that you're not claiming in terms of deductions because it costs you money to run your
Mhm.
business, right? You have to buy things specifically for your business, and those are tax deductible write-offs for you. So um, let's say you have expenses for food for your family, and
Yes.
then you have expenses for food for your children.
Right.
You would not have that food expense for the children. That is an additional expense that you are now assuming on your personal side because you're not doing it under your business. Does that make sense, LaShawn?
Yeah, I did list I am going to request that one-on-one. But I did select the 1099 NEC, and I did put
Mhm.
that information in the income that came in from that.
Mhm.
Um, and I am working on um calculating everything out, the tables and chairs and all the stuff I bought over the years and the food. I'm already calculating that up so I could put it on my personal tax form for this childcare business, but I'm going to request the one-on-one. I forgot how to do that, but
Yeah, yeah. Keep in mind, all of this is still going to go through your 1040. You don't have to file a different tax form, but you could be missing out on some
mhm,
deductions, and that's the main thing, right? So that's
mhm.
why I do want you to do the one-on-one with an expert coach that can help walk you through some of those things that you may be doing. And then there's also some tools that they may be able to connect you with to help you decide. Now, let's say, for instance, if you're taking subsidy payments or um, what's the name of it from Georgia? If you're taking subsidy payments, because I can't think of the name of it, CAPS, I think it is.
Yeah, yeah.
Um, they're going to send you a form letting the government know how much money you earned through getting that.
Mhm.
It's almost like the same as if you were on the food program and they sent you a 1099 saying you have earned XYZ dollars this year from the food program. So you still have to report all of those as income, and you have to make sure that you're reporting those things. Um, Otherwise, you kind of put yourself in jeopardy of getting in trouble with the IRS, and we don't want that to happen.
Nobody wants that.
No, ma'am.
Okay. Um, at the end, you're going to show how to do the one-on-one request again.
Yeah, I think I have some QR codes that I'll show you at the
Okay.
end that will help you to sign up for those sessions.
Oh, I appreciate it. Thank you.
All right. Yeah, and I appreciate your question. Thank you so much. All right, Miss Rudy, you've been patiently waiting.
Yes, ma'am. I just had a question about the when they do the taxes, right? Do that automatically go to Social Security, or do we have to do anything?
Say that one more time.
When they take the taxes out, do we automatically have to do the Social Security, or do it automatically come out?
Yeah, when they take it out, that's automatic. Now, if you have staff, do you have staff, Rudy?
No, ma'am. I'm a family
Okay.
trustee.
Yeah, then that's just going to be an automatic. After they take out that percentage, it just goes where it's supposed to go.
Oh, so when you pay your taxes, it automatically do that.
They're
Oh,
going to, yeah. Keep
oh,
in
okay.
mind, I do want to say this much too. If you are owing taxes at the end of the year, if you find yourself owing, one of the things that you're going to want to do, which is something that I wish my accountant had told me, you're going to want to understand and learn how to pay your taxes quarterly, because getting hit with a big tax bill at the end of the year is difficult for everyone, anyone, right? And if you have not heard of quarterly payments, and this is only if you're not getting refunds, right? If you're paying at the end of the year, like if you owe, you're going to want to make sure that you're being set up on quarterly payments, which is every 3 months. You can divide that annual payment into 4 equal payments, but it's like prepayment of your taxes so that at the end of the year, you're not hit with this massive tax bill. Does that make
Mm-hmm.
sense, Miss Rudy, for you?
Yes, ma'am.
Okay, any further questions, or did I answer your question?
Yes.
All right, thank you for your question. I appreciate your patience.
Thank you.
Any other questions? Feel free to either come off mute, raise your hand, however you'd like to do it. We're here for the next 10 minutes or so. Don't be shy. And keep in mind, there's no such thing as a dumb question. We only consider those the questions that weren't asked. All right. I am going to take us towards the end. Keep in mind, you can still ask questions if you have them. But I am going to basically say thank you all for attending this session, this webinar. And if you would like more information, I'm going to be dropping a couple of things in the chat here because LaShawn, this is some of the information that you were asking about. So what I'm going to do is I will copy and paste the website into the chat. Here we go. Decals. All right. So on that website, you can browse our entire library of self-study guides on topics related to your childcare business. You can learn about and register for upcoming webinars. We do 2 a month, or at least we try to, and you can register for small study groups. These groups are capped at 10 participants usually, sometimes give or take. And these are where you can do deeper dives into topics. Lots of the topics are listed on the screen, as you can see. And we want you to also be able to learn as much as you can and personalize things and get the help that you need for your business. So keep in mind that you are getting state approved training hours for these. And there are 4 sessions, so you would get 4 hours of training in those small study groups. So if you go to www.decals.georgia or ga.gov/thriving,